Jill Malandrino, Global Markets Reporter at Nasdaq. We're in the second half of 2021 and the ETF markets have been surging all year. Joining me to discuss is Simon Mott, Chief Marketing Officer at TrackInsight. Simon, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me back, Jill. Always a pleasure.
All right, now that we're into the second half of 2021 and the ETF markets have been surging all year, what have been the main trends so far?
Yeah, it's been fascinating. You know, the ETF markets have been on an absolute tear for the whole of 2021. We are likely to be on track to hit about $10 trillion in AUM this year. So phenomenal milestone. What I think the audience needs to take away here is in the last 3 months, it has been the best quarter in the history of ETFs. We've seen nearly $423 billion of additional flow hitting the ETF markets just in the last 3 months. That is a record, and it shows you that there is a real momentum, and that the traction that the industry has been looking for the last 15 or 20 years is finally happening. So I think anybody who's involved in the ETF industry and the people who invested in ETFs should be very excited about this, because it seems to me that a real tipping point is now occurring. So the growth has been very impressive, and more importantly, it's been consistent. But the other thing that we've seen is the growth of the market is attracting new participation. So growth doesn't just happen in terms of AUM, growth happens in terms of product range. And we've seen 83 different issuers in North America launch ETFs this year. There have been 235 ETFs launched in the North American market just so far, and we're going to expect a lot more coming. This is phenomenal momentum. I think it shows you that ETFs have changed from becoming an industry to becoming a distribution mechanism for investment ideas. And we see new asset managers, new issuers coming in almost on a weekly basis. So the trajectory is very positive. The momentum is very positive. And it seems to be happening kind of across asset classes and across regions. So I really see that 2021 has been a phenomenal year so far for ETFs. We're halfway through. Let's see what the second half of the year has in store.
And we've seen a lot of active ETFs launching. Why do you think this is such a strong pattern, and where can this go?
Yeah, I mean, active ETFs have been phenomenal this year. Out of those 230 odd ETFs that have launched in North America, 140 or 139 to be precise, have had an active strategy. So Jill, what this tells me is that active managers who previously saw ETFs as a threat to their business model have now really embraced ETFs as a new distribution technology. Active ETFs have seen $28 billion of flow year to date. So it's clearly a distribution strategy that works. And when I refer back to our TrackInsight survey that we did earlier in the year with a large number of institutional investors, we saw that a significant proportion, about 33% or slightly over a third, were going to increase their allocation to active ETFs. So the pattern is playing out just as expected. The performance has been very good, and it's been a huge opportunity for people who've got an active strategy, whether they're in the ETF market or whether, like dimensional fund advisors, they've been a traditional mutual fund manager and are now converting into ETFs. It's been a tremendous ride for anybody in that sector.
With all these new products coming to market, how can issuers differentiate themselves, and how can investors pick the right one?
Yeah, this is really the kind of crux, because the market becomes so crowded now. There's so many products, a lot of them are very similar. So this provides a real challenge for the issuer and also for the investor. So let's split that question into two parts. So for the issuer, it becomes very difficult to differentiate in this marketplace. And particularly when we look at what investors actually find meaningful when they select ETFs, brand of the ETF provider is actually very low in the hierarchy. What investors focus on is liquidity, cost, methodology, and risk return profile. So for new issuers who are coming to market, they can't rely on the strength of their own brand. They need to be bringing good ideas which are liquid and at a reasonable price. Now, for investors, the range is just increasing so widely that picking the right fund becomes very, very tricky. And so for them, they need to kind of work with people like TrackInsight, who have tools and data that they can understand the differences between those products. And Jill, as you know, Nasdaq is one of the distributors of TrackInsight data in the US, and all of that is available through the Nasdaq team. So for investors, I would say go beyond the marketing hype, go beyond the headlines, take a deep look into the methodology, take a look into the costs, understand how this fits into your portfolio strategy, understand what the risks are, and understand where the overlaps are in potentially adding new ETFs to the portfolio to make sure you're not paying for something that you've already got.
And Simon, in the last minute here, have you seen any short-term trends that investors may be missing?
Yeah, well, a couple of things have come up in the last couple of weeks, Jill. And one of the fantastic things about the ETF markets is, of course, they're so broad, right? And that diversity of product range has a benefit to it, because every single ETF is a window on a different market or a different sector. And so they can really tell a story in a way that other products can't. And what we've seen over the last couple of weeks, or the last week in particular, is a huge resurgence in emerging markets, particularly around Brazil and around China. In the last week, the top performing ETFs have all focused the Brazilian equity markets. And just in the last couple of days, the Brazilian economy minister has announced that GDP is predicted to grow by over 5% this year. So this has obviously excited investors tremendously. And we've seen ETFs like the iShares or the Franklin Templeton and the Van Eck up over 6% over the last week. Now, the other trend that we've really seen has been around China. Now, China was really having a hard time in the ETF markets a couple of weeks ago. The announcements and the aggressive rhetoric from the ruling Communist Party and the interference in the Dido IPO, I think gave investors some cause to pause. But recent activity and recent softening of that stance from the Chinese government has, I think, produced a little bit more confidence in Chinese equities. And so we're seeing, particularly around actually, I was going to say particularly around the technology sector, but actually that's not true. It's kind of happening in every single sector, from the internet to materials to kind of biotech. We've seen China equities being among the strongest performers of the last week, up anywhere from 5% upwards. The other things I would like to kind of point out for the audience is something very fascinating. TrackInsight, we look at sectors in a different way that you would get from your GICS or your ICB. So some of the themes that we've seen growing in the last month since we last spoke have really been related to the ideas of autonomous vehicles and next generation mobility. And so autonomous vehicles have delivered nearly 7%, 6.7% over the last month. But related sectors like battery technology have performed phenomenally well, up over 9.5%. And the strategic metals that feed into those batteries, things like lithium, are up even more, 16.5% up over the month. So what is interesting here, given the trend towards thematic investing, is that I think investors need to look broader when they invest thematically. Autonomous vehicles are a great way to play the future of technology and the future of human mobility, but there are other industries that feed into that, and what we see is they moving in parallel. So it's something to think about. And given the variety of emerging themes, I think we're going to see a lot more kind of correlation on these going forwards.
All right, Simon, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks very much.